Welcome back. In section 18, we're going to begin to delve into the specific KPIs that can be built around the global purchasing function. We're going to start by talking about the categorization of those KPIs. Typically, a suite of comprehensive KPIs for the purchasing function, both internally and with external suppliers and other supply chain partners, will include the following categories. Financial, always the big one. We have some great KPIs to go over there. Operational performance is another category to focus in on. Product quality, actual product-specific quality KPIs. Supplier-specific metrics. Human capital, that's related more to our internal measure of our purchasing department in the area of development and retention of purchasing professionals. And naturally, something we talked about a lot in Module 4, corporate social responsibility. We want to be measuring environmental efforts by our vendors, forced labor efforts by our vendors, etc. The point here being that when we put together a suite of KPIs for our vendors, partners, and even ourselves as purchasing professionals, we want them to be comprehensive. We can do that by creating categories. As noted previously, any suite of KPIs should be designed in a way that aligns with a company's goals and objectives. Purchasing, no exception to the above. Second bullet point, and conversely, KPIs should not be used to create what are called gotcha moments with employees or vendors, employees of our purchasing department. We're not looking to catch people doing something wrong. We're certainly not looking to punish people. The purpose of a KPI is to measure performance in important areas and channel behavior in desired directions. We see that in our third bullet. Let's say it verbatim. KPIs should be designed in a way that channels behavior in the desired direction. We don't want to punish people. We certainly don't want gotcha moments. As a trade tip, we said this briefly before, KPIs don't do much if they're not acted upon. If we discover that a vendor is having quality issues with the product and we measure that there's 100 defects per 1,000 items and just say, oh, there's 100 defects per 1,000 items, what a shame, that's really not going to help us very much. We have to act upon what we learn in the spirit of continuous improvement. In this slide, you'll notice from the title, KPIs for Global Purchasing, Finance and Accounting, we're getting into those individual categories that we spoke of just a moment ago. They're always, regardless of department, regardless of external partner, there has to be a financial component to the KPI suite. Let's begin with that all-important finance and accounting topic. Every department or functional area in an organization should use financially oriented KPIs. We just said that. Purchasing has a financial impact on a company in a variety of ways. Total spend. How much money are we spending on all this inventory that we're acquiring? And then the inventory levels themselves, the values of inventory that go where? On a balance sheet of an organization under current assets. And as we've said a bunch of times, the investment that a finished goods importer makes in inventories is oftentimes the biggest expenditure that it has. So obviously we have to have KPIs around that. As a trade tip, and continuing with this theme, financially oriented KPIs for purchasing should measure impacts on the balance sheet, the income statement, and the cash flow statement. The balance sheet, we already said why. That's where the values of inventories go, and purchasing's the one who's buying all this inventory. Income statement, we talked about this many modules ago. That's where landed cost is captured. So we have to tie that in as well. And the cash flow statement is a combination of what we see on the balance sheet and the income statement. Landed cost and inventory values being the key variables in that cash flow statement equation. Let's get into some details here around KPIs for finance and accounting. The suite of finance and accounting KPIs for purchasing should include total budgeted spend by month, quarter, and year, but for unit cost only. All the products that we import, what is the unit cost for each of them? What did we budget to spend on each of them? And the need to calculate that number. Second sub-bullet, also the total actual spend by month, quarter, and year, unit cost only. What did we budget to spend? What did we actually spend by unit, by total, by vendor, so we can make comparisons and uncover what? Variations between what we budgeted to spend on inventory and what we actually spent. That is captured in our third sub-bullet, item level variance analysis by budget versus actual. All of the above related to unit cost. We'll get to landed cost in just a moment. We have to isolate unit cost because that's vendor specific. As a note moving forward, so we don't have to repeat ourselves every 2 seconds, it is assumed that KPIs will be measured on a monthly, quarterly, and yearly basis. And let's also say, in the spirit of being a broken record, that these KPIs should also be tied into sales and operations planning. More on that when we wrap up this module. What else do we have for the suite of finance and accounting KPIs for purchasing? In the previous slide, we looked at unit cost. We have been maniacal about the emphasis we've put on landed cost. So naturally, in an import environment, we have to measure landed cost. That's what this slide is. Total budgeted spend by month, quarter, and year for landed cost. Total actual spend, so we can do that variance analysis between what we thought we were going to spend on landed cost versus what we actually spent. And once again, third sub-bullet, item level variance analysis between what we budgeted to spend and what we actually spent. It's a very good idea to isolate the measurement of unit cost, budgeted versus actual, and landed cost, budgeted versus actual. We always want to get to that landed cost calculation. That's what matters most. But when dealing specifically with vendors from a financial perspective, we have to start with the unit cost and then build up to landed cost. Let's roll out a real-world example to illustrate some of these points. In this one, measuring where the purchasing dollars go. The director of purchasing for an Ohio-based importer of costume jewelry has been tasked with creating a KPI that measures purchasing spend by vendor, unit cost only. Right now, the company knows that it spends $100 million a year on international purchases and that it works with 10 vendors. But beyond that, they don't have any consistent visibility into the distribution of their spend. They're spending $100 million with 10 vendors. Beyond that, things are a little bit cloudy. What tools and techniques can she devise to provide a supplier spend report that creates real value for the purchasing department? While there are several techniques that can be used to achieve the desired granularity, the importer might consider starting out with a Pareto analysis of its vendor base. This should be familiar. We've talked about Pareto analysis before. Also known as an 80-20 analysis, this approach is based on the principle that in the case of purchasing, 80% of the total spend will be concentrated with 20% of the supplier base. It never works out exactly 80-20. But a Pareto analysis helps us to isolate where the big dollars are going to, because it's not likely that we're spending $10 million each on 10 vendors to get to $100 million a year. In fact, as we continue to study this example, we'll see that that's not the case at all. Last sentence in paragraph 2, essentially a ranking tool, Pareto analysis is a quick and dirty but very effective way to determine where purchasing dollars are going. In addition to the above, supplier spend reports should also be structured in a cumulative fashion by both dollar amount and percentage of the total. We'll show what that means in just a second, but consistent with Pareto analysis, this technique keeps a running total as each vendor's spend is added to the overall total. The following example helps to illustrate what we're talking about. So we still have our real-world example measuring where the purchasing dollars go. Obviously, things have been rounded out a little bit here for ease of explanation. We have 10 vendors and we spend $100 million. That's pretty convenient. Not very likely it'll work out that way in the real world. This is for illustrative purposes. Left-hand column, we have our 10 vendors. We will note down the bottom that there's our $100 million total spend. In the second column, It's year 2000 and whatever spend by vendor. For example, in vendor 1, the year that we're looking at, we spent $20 million. Vendor 2, $18 million. Vendor 3, $17 million. Down we go, it all adds up to $100 million. Right from the get-go, we can start to see who we're spending the most with and perhaps where to concentrate some of our analysis and KPI efforts. Let's continue on and see how this looks from a cumulative perspective. Third column is cumulative spend in dollars, meaning that as we go from vendor 1 to vendor 2 to 3 to 4, that we're adding up the numbers until we get to $100 million. As we do the cumulative spend in our third column, we're going to borrow from column 2. Vendor 1, we spent $20 million. There's nothing to accumulate there because it's only one vendor. When we get to vendor 2, we know we spent $18 million. We add that together to get the cumulative spend of $38. The two vendors added together. Moving down to vendor 3, we spent $17 million. Add that to the 38, we get to 55. Vendor 4, we spent $13 million. Add that to the 55, and we get to 68. That's what cumulative spend means. So if we were having, for example, quality problems with our vendors, and we weren't sure how to isolate that quality problem, well, we might look at the cumulative spend, which at 4 vendors is $68 million, which, as we'll see in a moment, represents 68% of the total. Pareto analysis and cumulative spend in this instance tells us where our concentration of dollars is going. And that can be helpful from a variety of perspectives. And not just spend. Quality issues. Do we need to change vendor issues? Can we afford to take out 2 vendors? Questions. Can we add more vendors into our $100 million spend? This is just a good place to start. Cumulative spend helps us to see where the concentration of dollars are going. As we move over to column 4, we can see the percentage of the total. And these are just straight percentages. If we spend $20 million with vendor 1 and the total spend is $100 million, of course the percentage is going to be 20%. We spend $18 million with vendor 2, that's 18% of the total. $17 million with vendor 3, that's 17%. That's some pretty easy math there. It helps us to isolate in a percentage expression where the dollars are going to. Probably more important is the cumulative percentage, last column. We start out with 20% from vendor 1, but we know that vendor 2 represents 18% of the total, so we have to add the 20 to the 18 to get what? 38%. What does that tell us? That 38% of our total spend is with 2 vendors. And if we are going to analyze all of our vendors on specific issues, whether it's quality related, packaging related, timeliness of documentation related, we can capture 38% of what we're talking about by just looking at 2 vendors. Vendor 3 is 17% of our spend. So to get the cumulative there, we have to add 38% to that 17 to get to 55. For vendor 4, it's add 13% to 55 to get to 68. And on we go. All the way up to vendor 4, because we already knew we were spending $68 million out of 100 with 4 vendors. Of course, due to rounding and convenience of calculation considerations, 68% of our spend lies with 4 vendors. If we're going to analyze our vendor base, it might be a good idea to start with those 4 vendors and move on from there. That's what Pareto analysis does. That's what cumulative calculations do. It's a best practice to engage in this type of activity, to really kick off other, both financially and non-financially oriented analysis. This concludes our section for now. We're going to come back in the next section and continue on with KPIs for finance and accounting specific to purchasing.